Congratulations again on getting your commitment letter. Now we need to move from commitment letter to checking all the boxes necessary to get to a closing. And first and foremost, I want to let you know we don't disappear during this process. It is likely that you're going to get introduced to a closer at the lender who is going to help facilitate things with the closing process, but we continue to stay involved here at CLX through the entire process. Our goal is to help make it go as smoothly as possible for you and get you to a closing just as quickly as possible. I always tell people in the closing process stage to buckle up. It's kind of like riding on an airplane. There's going to be times when it's safe to move about the cabin, and there's going to be other times where you're going to hit some turbulence and you're going to need to buckle up and be safe. It's the same with getting to a closing. No loans ever go completely smoothly from commitment to closing. I wish I could tell people it was the case no matter how much we try to make it happen. It's just not reality. There's always something that comes up. A missing document from a seller, a financial document that you need to update, something that you can't find a copy of from 10 years ago. There's always something that will need to get tracked down. Just be sure you stay patient and trust we can work through it. Again, once a lender has approved a deal, they're typically going to do just about everything they can to get it to a closing. At that stage, they've already got it on their pipeline to close. They're counting on it to close. So we just need to work through that process to get it to that closing. Please note the timing involved to close a transaction can vary greatly depending on the type of transaction. If it's a real estate deal and we need appraisals and environmental reports and they weren't ordered earlier in the process, you're probably looking at least 30 days to get the reports in and get to a closing. If you're doing a business purchase, it may take 30, 45 days. The biggest issue with a business purchase is the lender is going to have to approve the final purchase agreement between buyer and seller. And a lot of times that agreement doesn't even get negotiated until after the loan is fully approved. Depending on how much time it takes the attorneys, buyer and seller to negotiate that agreement can delay a potential closing. Again, once that agreement's negotiated, it has to go to the lender to be sure it meets the terms of the approval. If it doesn't meet the terms of the approval, then it goes back to the buyer and seller to make the appropriate changes. This can all take time, and again, you can't close until everything's in place. Usually whatever documents are required on a closing checklist, most lenders want a week from the date all those documents are received, or 90 to 95% of those documents are received before they will actually close. Most lenders won't prepare documents until they know the exact date that they're closing, and most of the time they won't be able to set that date until they have all the paperwork necessary to close. In general, the process to close a loan is going to take anywhere from a week to 10 days to maybe even as much as 2 months depending on the type of transaction. But again, we will work with you to see it through as quickly as possible. If there are dates and deadlines to hit, we will work with you to do everything we can to hit those deadlines. Now that you have some general background on the closing process, let's talk about the closing checklist. The lender is going to issue a closing checklist. Most institutions are going to assign a closer or processor to work through that checklist. My recommendation after we receive the checklist is always to get on a conference call with the closer and or lender to discuss that checklist. There's likely going to be items on that checklist that may not apply. There may be items on that checklist you don't understand or you're not sure why they need to be provided. We can discuss all these items on that call, and we can make a path to get the items necessary to get to closing. Sometimes that closing checklist is going to appear very daunting and it's going to be very large. This is especially the case when it comes to SBA 7A loans, where the bank is required to collect a substantial amount of documentation because it's what's required by the government, by the SBA. In those cases, I usually recommend breaking up the closing checklist and assigning it to those people in your sphere of influence who are going to be required to provide that documentation. Whatever documents are required by the insurance company, you break that off and you get it to your insurance agent. Whatever legal documents are required, you break that portion of the list off and you get it to your attorney. If it's a sale, you get the paperwork required to the seller for their portion of the transaction. By breaking it all apart, it won't be as daunting and you will find the information will flow in quicker. The sooner you can get the individual pieces to those people that will be responsible for it, the sooner you're going to get that information back in. I also recommend setting up a process to follow up with the closer at least on a weekly basis, whether that's by email or by phone, to discuss the items missing in the closing checklist. There's often questions that are going to to come up in the process, and this is a great time to get those questions answered. If updated financial information is provided to get to a closing, it's important that you get that financial information in as soon as possible. And we also recommend you don't send that directly to the closer or bank, but you send it to us first. That way we can review it and be sure there's no issues with the financials that could trip up your loan approval or your closing. If there are issues, we can work through you to cover those issues, or if there's been some change in financial condition, we're better off to go to the lender in advance and explain that change and try to get the approval tweaked versus just sending them documentation and catching them off guard. If you have a complex transaction like a business acquisition, please keep in mind that a lot of the documents required will need to be reviewed by the lender prior to closing. That's going to be all the seller closing paperwork, the seller purchase agreement, and other documents. So the sooner you can get those in and get them reviewed, the sooner you're going to be able to get to a closing. Also, as you start working on the closing checklist, never hold documents back. You don't need to wait till you get all 20 documents required to close and send them all over to the closer at once. Whatever documents you have, as you get them, send them to the closer or send them to us to review and send to the closer. In fact, I prefer you send them to us first so that we can review them. The reason why you want to get them in sooner is maybe an insurance policy you thought is going to be satisfactory, but it's not satisfactory to the lender, so we need to correct it. If you wait till the last second to turn that document in, we've lost time we could have been working to address that concern or get that policy changed. So all these documents do need to be reviewed and are reviewed by the lender. So again, don't hold them back. Let's get them in as soon as possible. That way, if there are issues, we can address them as quickly as possible. Lastly, as it relates to the closing checklist, please keep in mind that we do not control the lender. We cannot make a lender move quicker. We cannot control when a closer or a lender or a doc prep person is out of the office. The best we can do is give the lender a detailed timeline, get them to agree to that timeline, and then get them the documents within that timeline so that they can get us to a closing date. But sometimes things change during the closing process and we need to address them. And sometimes lenders are inflexible. We will do everything we can to make the path as smooth as possible, but just keep in mind we can't control the lender and there's certain things they're going to require that we're not going to be able to get around, and we're always going to let you know what those items are. The last part of path to closing is third-party reports. The first thing we need to do is identify what third-party reports are required for your specific loan. And sometimes deposits are required for those third-party reports. So we need to get those deposits over to the lender as quickly as possible because a lot of the time they won't order those reports until they actually have that deposit in hand. Here's an example of some of the types of third-party reports you might need. We're going to need title insurance if there's real estate involved. If there's business assets involved, a UCC report, which will be ordered by the lender, but could come back and need to be addressed. If there's real estate, you're going to need a phase 1 environmental report likely, or some other sort of environmental report, as well as an appraisal. If it's a business acquisition, you're probably going to need a business valuation. You may need an equipment appraisal. You can also need equipment appraisal for general business lending. And in some cases, you may need some other sort of audit or review report. It's important to identify what's needed up front and what type of information you're going to have to provide to those third parties who are going to be performing those reports. And it's important to get them scheduled and done as quickly as possible because reports like this can delay closing. Now, what happens if there's an issue with a third-party report? Well, oftentimes those can be addressed. There may be some issues that show up on a UCC report, like an old lien filing. We will just have to work to get those items removed. The same thing can happen on a title report, where we'll have to work to get some items removed. If there's an issue on a phase 1 environmental report, as an example, there may be further testing required, which is done with a phase 2 environmental report. If this is to occur, we may need to get an extension if it's a purchase contract. There may be the opportunity to get the seller to reimburse you for that cost. Whether you're buying the property or somebody else is buying the property, that same environmental issue is likely going to come up and need to be addressed. Lastly, what happens if an appraisal comes in short, whether it's a business appraisal, an equipment appraisal, or a real estate appraisal? In some cases, that could be a serious problem, but in other cases, it may not be a big deal. We can always look at other collateral. We can possibly get a revised appraisal done. There's a lot of different approaches we can take, so don't hit the panic button if there's an issue with the appraisal. Let us see if it's something that we can work through. Please keep in mind that in some cases, if you need to close quickly, you can pay extra money to get some of these third-party reports accelerated. It will come at a greater cost, but it is a possibility if you need something to close quicker. But you also need to keep in mind that every report that comes back to a lender needs to be reviewed by that lender, and different lenders have different review review processes. Federal guidelines require lenders to review all appraisals, and sometimes that review happens internally at an institution, and sometimes they have an external reviewer who does that work. Depending on who's doing that work, it could add several days to a week to the appraisal process. So even though a report may be turned in by an appraiser, we may not have a final review for several days to a week. Please keep in mind, we can't control the timeline on some of these processes, and they are mandatory for these institutions to move things forward. But we will do everything we can on our end to help speed up the process. Lastly, I'm going to tell you that things can come up in the closing process. Your deal may change. You may struggle to find a document. Don't hit the panic button. We can always go back to the lender and tweak an approval if we need to, if there's a material change. We have flexibility. Again, these lenders have approved these loans. At this stage, they want them to close. So they're going to do what they can to get it through the closing process. Again, once all the closing paperwork is in from the checklist, we're going to get that closing date set, and we're going to move to the closing. So I hope to see you at our final video on the closing.